Most people think XRP volume in Korea is just another retail hype cycle. They think it's emotional trading, speculation, maybe even irrational behavior. That assumption is wrong. What's happening in South Korea right now is not sentiment-driven. It's structural. XRP is exploding in volume not because traders love it, but because the system forces them to use it. And once you understand that system, you'll realize this isn't a temporary spike. It's a blueprint. Today, I'm going to break down why XRP became Korea's default trading weapon, how spot-only laws accidentally created the perfect environment for it, and why this pattern matters far beyond Korea. This isn't about price prediction. It's about market design. Let's get into it. While global crypto commentary remains fixated on Bitcoin dominance, ETF flows, and US macro headlines, South Korea continues to operate under a completely different market logic. Inside its domestic trading ecosystem, XRP has quietly become the most important asset, not because of ideology, but because of structure. In practical terms, XRP now functions as the default trading instrument for Korean retail participants. It routinely outpaces Bitcoin and Ethereum in volume, despite being smaller by market capitalization. This alone should force analysts to pause, because markets don't do this accidentally. Globally, Bitcoin is treated as a long-duration asset, something to hold, hedge, or store value in. In South Korea, the dominant use case is different. The market is optimized for speed, turnover, and execution, not long-term conviction. Exchange-level data confirms this repeatedly. When volatility increases, Korean traders do not rotate into Bitcoin. They rotate into XRP. This pattern has persisted throughout 2025 and into 2026, showing up across multiple venues, not just a single exchange anomaly. The country's largest exchange has consistently ranked XRP as its most actively traded asset, ahead of both BTC and ETH. The same behavior appears on secondary exchanges, where XRP KRW remains one of the most liquid pairs in the market, often second only to stablecoin pairs. Zooming out, the broader context matters. Altcoins account for roughly 70% to 80% of total trading volume on Korean centralized exchanges, far above the global average of around 50%. XRP doesn't just benefit from that imbalance. It sits at the center of it. The reason Korean traders prefer XRP has very little to do with belief systems or long-term narratives. It comes down to utility under pressure. South Korea's market structure rewards assets that can be traded quickly, repeatedly, and at scale. Most activity is spot-based, denominated in Korean won, and driven by short-term decision cycles. In this environment, the best asset is not the one with the strongest store of value argument. It's the one that behaves most predictably under stress. XRP offers deep order books, consistently tight spreads, and low execution friction. That combination makes it the most ergonomic trading pair for retail participants who need to enter and exit positions rapidly. This becomes most visible during peak liquidity windows. At the start of the business day, historically the busiest trading period, capital floods into the market all at once. Many assets cannot handle that surge cleanly. XRP can. As a result, it has evolved into the default rotation vehicle. Traders treat it less like an investment and more like high-speed rail for capital movement. Structural constraints reinforce this behavior even further. Domestic exchanges largely prohibit derivatives and leveraged products. Traders who want leverage must either move capital offshore or manufacture volatility domestically. This creates a split market. Those who stay on local exchanges lean into high beta assets instead. XRP occupies a precise sweet spot. It is volatile enough to generate meaningful short-term returns, yet liquid enough to allow fast exits without slippage. In effect, XRP becomes a proxy for leverage in a spot-only environment. Psychology compounds the effect. Many Korean traders missed the early exponential phases of Bitcoin and Ethereum. In search of similar upside, attention naturally shifts toward altcoins that still feel early relative to their perceived potential. Historically, this behavior has driven some of the most aggressive short-term rallies in crypto, often led by Korean retail flows. XRP has repeatedly been one of the primary beneficiaries. Market mechanics alone don't explain everything. Korea's XRP community exhibits unusually high engagement density. Participation is social, coordinated, and persistent. Millions of users actively trade on domestic exchanges, creating a feedback loop between price action, sentiment, and volume. At several points last year, buying pressure from Korean venues temporarily exceeded that of major global exchanges. This isn't passive speculation. XRP traders consistently show up during volatility, reinforcing liquidity rather than fleeing it. The result is a self-sustaining moat, where participation itself becomes a stabilizing force. What began as a retail-driven phenomenon is now pulling institutional infrastructure into orbit. As regulatory uncertainty around XRP has faded, infrastructure providers have started aligning with existing market reality rather than fighting it. Custody, settlement, and tokenized asset services are increasingly being built around assets that already dominate real trading flow. By supporting XRP directly, institutions are validating the market's choice. The narrative has shifted. XRP in Korea is no longer just a speculative instrument. It's becoming embedded infrastructure. What looks like noise from the outside is, internally, a highly optimized system doing exactly what it was designed to do. And that's why XRP volume in Korea isn't fading, it's compounding. South Korea matters because it removes theory from the conversation. Most markets talk about what XRP could be. Korea shows what XRP does when friction, leverage, and capital controls are real. In a pure spot environment, where traders cannot hide behind derivatives or synthetic exposure, liquidity becomes the ultimate weapon. Assets either function under pressure or they don't. XRP does. It absorbs volume without widening spreads. It clears positions without choking order books. It remains usable when volatility spikes. That's not a narrative advantage. That's a systems advantage. If XRP can dominate in one of the most aggressive retail trading environments in the world, it tells you something important. XRP scales down to retail stress, which means it can scale up to institutional flow. Korea is effectively running a live liquidity simulation every day, and XRP keeps winning that simulation. Markets rarely stay isolated. When a structural advantage appears in one region, capital eventually copies it elsewhere. The same mechanics driving XRP dominance in Korea, spot-heavy trading, regulatory friction, liquidity preference, exist in other markets moving toward tighter controls and onshore trading. As more jurisdictions restrict leverage, tighten exchange rules, or prioritize fiat-based spot trading, the same question emerges. Which asset actually works under these conditions? Korea has already answered that question. And once infrastructure providers and institutions see where real liquidity forms, they don't fight it. They build around it. That's how speculative behavior turns into market structure. So when you see XRP dominating volume in Korea, don't dismiss it as noise. Don't call it retail madness. What you're looking at is a market doing exactly what it was engineered to do. Spot-only exchanges, retail-heavy participation, high turnover, limited leverage. In that environment, the asset that survives is not the one with the best story. It's the one that moves fastest, settles cleanest, and absorbs pressure without breaking. That asset, in Korea, is XRP. And once institutions start building custody, settlement, and tokenized infrastructure around the asset that already controls real liquidity, the game changes. Korea isn't predicting the future. It's stress testing it. And XRP is passing that test every single day. That's the signal most people are missing.